Good afternoon. George Cavaligos for HFT Bonds. Well, the bulls finally woke up last night, and we saw both bonds and notes come in this morning pretty well bid, up about half a point in the bonds and a quarter of a point in the notes. And we kept seeing buyers throughout the day, mostly short covering, I think. And now we've got the notes above those old highs at 124.23. The bonds still haven't gotten above their old high at 130.14. We got close, 130.11. 130.12, 130.15 is a big resistance area, and 125 even is kind of a big make or break area for the bulls. If they don't get above that 130.15 and 130.14 level, you can make a case that the rally off of Friday's lows, if you take a look at it on an hourly chart, is almost the perfect ABC up. We need to get above those levels and extend this third wave, if it is a third wave. We don't know. It could be a C wave, part of a big correction that kind of leaves the door open to some lower lows still, or at least a retest of last Friday's lows. So we want to see a little bit more headway, maybe tonight. Market's gotten itself into this short covering mode. It's kind of odd, the data isn't driving it. Equities aren't really driving it. I think there's just sort of a bit of a kind of a flight to safety with this idea that the taper's coming and how it's going to probably hurt some of the more exuberant markets like equities. And it's prompting some, I think, new buying in the treasuries and some new buying in the gold, and even the Japanese yen finally responded here. We're getting back into that correlation again where gold's up, yen's up, bonds up. So keep that in mind. Keep an eye on the yen. Closed near its highs, but even still, it's only up 45 ticks on the day. Gold's obviously more impressive here, breaking above some resistance levels, and looks like it might be putting in, maybe a double bottom on the gold chart here. It's interesting. Did a little bit of buying in some of the gold equity ETFs this morning. We talked about it in the chat room. Obviously, that stuff was very exuberant right on the opening, kind of calmed back a little bit, and then we put our buys in there. So we'll see. Friday's closes will be key. If we can get, all these markets to break out of these recent little ranges at least and show us some kind of more bullish price behavior, I'll be a little more comfortable as a bull here. Again, watch those levels, 125 even on the upside in the 10-year. 130.15 in the bonds. Bonds actually have a small double top right now on the hourly charts against 130.11. So we want to be cautious if you're bullish at this point, especially going into the 10-year note auction tomorrow and the 30-year on Friday. Remember, typically the market will sell off going into those auctions, trying to get them a little bit cheaper. Typically that will happen. If it doesn't, that means there's some other buyers out there usually. So keep an eye on that. It could be a little bit of a change in behavior going on in the markets right now. Something we want to keep an eye on. On the downside, we're pretty far from the major support levels. 124.10.5 would be kind of a big level on the downside in the 10-year, and around that 128.31 to 128.31 to 129.01 area. We don't want to see the markets break much back below those areas if we want to remain in some kind of a bullish mode. So keep those in mind. I'll be looking initially to buy a dip overnight, looking for at least some type of a higher high into the London session. That's where we've seen a lot of the buying lately, right around that 2 a.m. Chicago time London opening, as most of those London hedge funds have been overly short the bonds and notes here. So let's see if we can squeeze them a little bit more tomorrow. Have a great night, everybody. See you tomorrow.